crypto markets are volatile by nature. It's a 70% volatility asset class. It has deep drawdowns and it has tremendous upside. In fact, it's the best performing asset class in all recorded history. But with that best performance comes volatility. It's something I warn about in this don't fuck this up thesis, which is don't take leverage. Don't try and trade around or FOMO into stuff. Just be careful what you do and stick to the basics, stick to the bigger tokens. If you're going to degen into stuff, do it in the smaller stuff, because that stuff's much more volatile. Your probability of getting it wrong is very high, although you can get 100x in the space as well. I understand that's attractive to many people. So what's going on now? Why is crypto so shaky?
Wait a minute, everyone. Welcome to Bitcoinzilla, your platform for daily cryptocurrency analysis and news. Our mission is to keep it simple. Bitcoinzilla offers engaging information that is easy to understand. Our analysts keep their eyes on the latest news to provide valuable insights via email. Don't miss out on this opportunity. Join our community of 10,000 subscribers and experience the new edge with Bitcoinzilla. Subscribe now. In this video, Raoul will share his views on what's shaking the foundations of crypto, how does liquidity shape the fate of digital currencies, and most importantly, how can you sail through the ups and downs without capsizing your investment? Let's join Raoul Pal in a conversation about these topics and more.
So what's going on now? Why is crypto so shaky? It's the same reason tech's been shaky. It's liquidity, stupid. Remember, I've told everything about this everything code cycle. Liquidity is the big driver of all asset classes, and particularly crypto. It's the most receptive to liquidity injections or withdrawals. So I correctly managed to time the bottom in 2022 based around the liquidity cycle. And the forward-looking elements of the liquidity cycle continue well into 2025. So I don't have anything to concern over. So therefore, we're looking at the wiggles in liquidity. And those of you who follow Mike Howell, who's on Real Vision frequently, he also follows liquidity. He's probably the expert on liquidity. And he talks about the liquidity air pocket that I've looked at as well. The liquidity air pocket was happening. If you think about the US liquidity, it's driven by the Fed's balance sheet, which they've been doing QT, so they've been tightening it, making liquidity less available. But that's been offset by the Treasury, by the draining of the reverse repo. The reverse repo is an offset to what the QT was doing. And in the meantime, the other part of the equation is the Treasury General Account, which is the checkbook of the US government that Janet Yellen controls. And she's been building that. But these have meant the liquidity based back in 2022 and has been going vaguely higher. The everything code cycle taught you that there is no way of financing the debts. It's now become a word people use, fiscal dominance. This is the everything code cycle I started talking 2 years about. The everything code cycle says, well, if GDP growth is too slow, then the amount of debt in the system is too high. So you need either interest rates to come down or you need growth to go up. Now, growth is driven by demographics over time. There's not much we can do about that. You get cyclical growth, but you don't get the overall trend rate growth, which has been slowing. So the available GDP has to pay the interest on the debt between the government sector, that's 100% of GDP in debt, and the private sector is 120% in debt. So we've got not enough GDP to cover the interest payments. This gets really exacerbated when interest payments are high. Trend rate of GDP growth is about 1.75%, call it 2%. Whilst interest payments right now are, let's say, 2-year bonds are 5%. Okay. And then if you double that, taking into account the private sector, you've got 10% of interest payments and a nominal GDP growing at whatever it is, 5. So there's not enough GDP, which is why the bond market's been freaking out. Over time, yields have risen, even though the Fed have been talking about cutting rates. And this is the issue of not having enough GDP growth. This is the everything code cycle. So what it leads to is what's known as more cowbell, which is stimulus. Stimulus can come in a number of ways. So the most obvious way is reducing interest rates themselves. That has been a typical path. The other way is the backdoor mechanism of injecting liquidity into the system. Quantitative easing is the best known one. The other one is draining the reverse repo and also draining the Treasury General account.
Bitcoin's leap over $65,000 has rejuvenated market confidence. While the future trajectory is watched with a mix of optimism and caution, economic indicators and mining stability play pivotal roles in the cryptocurrency's journey ahead. Bitcoin starts the week strong, crossing the $65,000 threshold. Despite a recent sell-off, Bitcoin rallies, resisting bearish pressures. Observers question if Bitcoin can continue its climb towards record highs. The ST cost basis and 100-day average are key during pullbacks. Bitcoin ends the week on a high note, maintaining above $64,000. Market remains cautiously optimistic amid price fluctuations. The 100-day 7i and ST realized price are pivotal support levels. Analysts look to the 50-day EMA as a sign of sustained growth. U.S. employment figures could affect Bitcoin amidst Federal Reserve decisions. The DXY's decline post-jobless claims data impacts market expectations. Traders remain cautious with neutral funding rates despite Bitcoin's price rebound. The Crypto Fear and Greed Index indicates increasing greed, requiring careful analysis. Bitcoin's mining difficulty may slightly decrease, yet the network's fundamentals are strong. Miners' commitment to network security remains unwavering amid price volatility.
Trying to keep everybody on the straight and narrow. And when you see these drawdowns, it always feels terrible. And I've been doing this since 2013, and they always never feel great. But the reality is, it's normal. So it's normal in the fact that in the last 12 months, you've probably forgotten this, but this is our 5th or 6th 20% pullback in Bitcoin. So you've dealt with this many times before. You just kind of forget it, which is weird. And I think Coinbase put out a super interesting tweet, which was, there have been 5 Bitcoin bull markets. In an average bull market, you'll have to survive the following to ride it to the top. 6, 5 to 10% drawdowns, 3, 10 to 20% drawdowns, 2, 20 to 30%, 1, 30 to 40, 1, 40 to 70. And that's all during a bull market. So it takes a certain kind of gumption. It takes an ability to turn off Twitter, to turn off your screens and say, has my thesis changed? Is the adoption of this technology stopping? Is there any other reason that it's going to slow down? Where are we in the business cycle? I spend enormous amounts of time trying to educate you guys that this is a macro asset that's driven by the business cycle. Just happens to be forward-looking, like technology stocks, and it's driven by the liquidity cycle. So has something changed in the business cycle that would tell us that we're going to have a failed crypto cycle? Well, in all probability, that's a no. So therefore, it's corrective price action. And if you happen to have extra money on the sidelines, use these corrections to add. That's what I did. I was lucky enough to have a bit of cash, and I added to my Solana position. Great. And I found that compounds really well over time. It's a key way to make better returns out of this space is use the drawdowns to your advantage. Even the big cyclical ones. I didn't sell out of anything last time. I had no intention of it. It wasn't like I missed the top or anything else. I knew that to get back in is really hard. If you take X sum out, you never put X sum back in again. You go smaller because you don't want to risk it all. Your whole psychology is screwed up. So what I prefer to do is say, well, this is a longer term trade. When we get the big drawdowns, I just want to add. And then you compound and you're back to all-time highs well before the market is. And that is really, really a superpower.
The awakening of a decade-old whale, stirring speculation in the market. A dormant address with 687 BTC is active after 10.3 years, hinting at potential market moves. Bitcoin's value has soared, yet a 7% drop in trading volume suggests market hesitancy. The Ichimoku cloud indicates a possible bearish trend despite the price increase. Bitcoin processes its billionth transaction, excluding Lightning Network activity. Ethereum surpasses 2 billion transactions, highlighting its widespread adoption. BlackRock's BUIDL funds asset reflects the growing interest and potential in tokenizing real-world assets, offering new opportunities for liquidity and investment in traditionally illiquid markets. If you've been with us so far, a big thank you. Don't forget to subscribe for free to Bitcoin Zella for your daily news. The link is waiting below. That's all for today's crypto news. Stick around for more updates, insights, and analysis on cryptocurrencies. Share your thoughts in the comments, like this video, and subscribe for more exciting content.